So I think the biggest question on everyone's mind is why would you self-fund your benefits plan compared to a fully insured plan? It seems like there's more risk if an employer is responsible for paying claims. And I think the biggest reason would be premium savings. Your stop-loss insurance premium is going to be a fraction of the fully insured premium cost. So on an annual basis, you're looking at the potential for significant savings when you look at a fully insured plan versus a self-funded plan. Another reason would be plan flexibility. With a self-funded plan, you're only responsible for federal mandates. You're not responsible for state mandates. So that gives the employer much greater flexibility in terms of designing the benefits inside that health insurance plan. Another reason would be tax savings. Your stop-loss premium, again, is only going to be a fraction of what the fully insured plan premium will be. So your tax responsibility is only going to be on that stop-loss premium. And when you look at your plan costs throughout the year on an apples-to-apples basis, if you had $1 million fully insured plan and you have $1 million self-insured plan, only about 15 to 20% of that self-insured plan is going to be insurance costs. So the tax that you pay on that insurance is going to be much less when compared to a fully insured plan. Another reason would be improved cash flow. With a self-funded plan, early on in the plan implementation, there's going to be a lag in when claims are actually incurred and when the employer is responsible for paying those claims out. So the first 2 to 3 months, when transitioning into a self-funded plan, you're going to see significant cash flow improvement. In addition to that, with a self-funded plan, you're not responsible or not required to pay a set monthly premium to a health insurance carrier like you would in the fully insured plan. So with a self-funded plan, if you have positive claims experience or if you have a healthy group and your claims are running well, then you're going to have an improved cash flow situation. So those are a few of the reasons that you would self-fund your benefit plan compared to a fully insured setup. So one of the other big advantages with a self-funded plan is the increased reporting capabilities that the employer will receive from their third-party administrator. Since the third-party administrator is processing all claims from physicians, hospitals, MRIs, centers, and labs, there is detailed reporting information that the TPA can provide to the employer. Now, all of this information is HIPAA protected and there'll be anonymous reports. The employer will just receive aggregate information as far as hospital utilization, prescription utilization, outpatient surgery, all sorts of different conditions. And the reason that this is a positive advantage compared to a fully insured plan is because it allows the employer to implement targeted initiatives to improve the overall health of their employee population. So, for instance, one example might be an employer sees that a lot of their employees are visiting the emergency room. And the emergency room is a significant expense for a health insurance plan. And a lot of times those conditions can be handled at an urgent care center or some other facility that's outside of a hospital. So you can actually change your plan, your benefit plan structure, where you might increase your emergency room copay and you might decrease your urgent care center copay to try to affect the behavior of employees who are just going directly to the emergency room. Another example might be that you see that there's a high utilization on Tier 3 drugs, and these Tier 3 drugs have generic equivalents. Well, you can educate your employees that the generic drugs work just as well as the Tier 3, and they're significantly less expensive. A third example might be that your third-party administrator is sending you back reports that there is a significant occurrence of maybe diabetes amongst your employees, and therefore you can implement wellness initiatives to control weight or increase physical activity, maybe putting in a gym reimbursement incentive. So I think the benefits of a self-funded plan when compared to a fully insured plan is that now as the employer you have much more, you're empowered with your information. With a fully insured carrier, you're really limited to the information that they provide you with at the end of every year. So I think from a advantage standpoint, There's much more useful information that you'll receive when you're in a self-funded format.